Good morning, everyone. Welcome to the room. Hope you had a great weekend. As always, trading futures involves risk, not suitable for all investors. Information presentations for educational purposes, not a trade signal service, not intended to be financial advice. Last couple of days have been decent in terms of the ranges. I thought Thursday and Friday were a little bit challenging. Yesterday, nice short trade that took us down towards lows on the day. We can go through that. In the overnight, we've got this low down here, 74s, basically trading back down to the 50% retracement long that I have here on the daily. This guy here. But opening now, right, sort of in the middle of the body of yesterday's candle. Slight gap down, but nothing to be super alarmed about. Yesterday's candle, what was interesting is that we closed at the high of the day. So once we broke Friday's low, it's kind of been the pattern. Friday we broke Thursday's low, and then we kind of rallied. That was things were being bought, but yesterday they were really being bought, so much so that we made a high on the day, and that was our close. So a break above the prior candle's high is going to be significant to signal the start or the resumption of the uptrend. As of right now, we have made a lower low each day, but we have not broken the prior candle's high. So from a swing trading perspective, that's exactly what I'm looking for. Strong stocks that make a pullback, and then my entry to get in the uptrend is when we break that prior candle's high, the high price of the lowest bar in the pullback. And so today, no real news on the economic calendar. Pretty quiet week, actually. Friday, consumer sentiment, jobless claims on Thursday. But right now, we've traded already at the 28.75s. I drew up the short up here from highs to lows. That's a 29.06. And then this horizontal line is our highest close, 29.3975. So as it stands, we've got this double top up here. But the pullback, we're holding the retracement at 75s. If we zoom out a little bit, we can see that we've traded multiple times to the bottom of this channel. And so a little bit deeper pullback in the past, in the last 6 months, has fueled another rally, another leg up. And where we're sitting on this pullback, sort of on top of some of these highs. So if I do this, you can see the 74 up here. The January high, it's exactly right where we stopped and found support. So all of this, you can't even see the line because it's right on top of the 50%. So all of this leads to, a couple scenarios. If we get bought up down here by longer term traders with bigger positions that can push the market up, then things would look good for us to break highs and move up to 2980s. If we keep going lower and take out the swing low back here at 65s along with the 61.8, then a bigger, deeper, longer sell-off into the end of the year would be anticipated. But as of right now, things are looking fine for continuing the trend higher. But if that changes, then we can adapt. But even so, yesterday the daily bar closed bullish, and there was a great short opportunity. So it's not always about having to trade with the higher time frames, with the daily chart intraday. We can take other trades that might seem counter trend to the daily trend. Now, yesterday's case, we were moving lower throughout the morning, and after we had rallied a little bit. So it can be a little bit deceiving just by looking at a daily candle, because it doesn't look that way throughout the middle of the day. So we'll see what the market gives us this morning. I drew the overnight high to low. That has just breached. It's 61.8. Decent looking chart. Not really making deeper pullbacks here on the move up, but decent moves. Now, if we look at the high from the close yesterday afternoon, right about, to lows of this morning, market paused and reversed at the 28.88 at that retracement. If we zoom out a little bit more, see what else we can pull in from the prior day to give us some context. To low to high. That's at about a 28.80, just below us. So we've got 250s on the daily chart that we're in between, above and below. 250s on what I call the 15-minute or the 30-minute intraday chart. Here, and we were trending pretty consistently in 30-minute retracements to the downside, trading at the 50, selling off to negative 23. Next one, traded at the 50, sold off to the negative 23, and then yesterday we had our break on that 30-minute chart. So now, not quite able to break the swing high. If we can get up there this morning and break a 95, then a pullback to the long at 28.80s would be a little bit stronger. We've got a 93 swing high from yesterday morning, and then this V yesterday. So I would expect 2880s to have some kind of support down here. And notice how this short above us targets the long. So at this point, the question I get a lot is about which trade to take. When I say, the short traded first, this is what I mean. The short has already touched. I've already drawn up the long, and I drew up the short. So I had both drawn, and the short traded first. Now we've also got a long trading, getting tighter and tighter here, more and more retracements trading, even if it's only a temporary bounce. It's nice to see, okay, yep, there was a little bit of a buyer interest here. We bounced a little bit, and then notice the first short after this bigger short traded and has moved us lower. So following that same process, regardless of the type of day, is how I go about managing multiple retracements. We did have a high tick at highs. Now, when it's early in the morning like this, I acknowledge that the high and low ticks on the NYSE tick, they're probably going to be beat out by higher ticks or lower ticks. So it's helpful to see if they line up. Okay, 635, 635. We do have a high tick at highs. Then we come over here and we say, oh, well, we got a higher tick. Where are we at? Well, that's weird. We're way down at lows. So, and then we look at the number of the tick, 85. That's a very, very low number. That's not going to hold as our highest tick of the day. And the first couple of ticks in the first minute or two, sometimes we'll get a big, like a big reading right off the open, minus 1,000 or plus 1,000. I also kind of discredit those because they tend to be a little bit misleading at times. You get a swing or a high or low reading right at the open, and then it takes a little time for those to be taken out. So I can't really turn the first minute or two off of the tick reading, but just like letting the market settle out a little bit, the ticks need a little bit of time to develop further. Let's see what we got for the profile here this morning. Yesterday, we basically traded to where the top of yesterday's profile, the top of value area, was just below the top of Friday, and then the bottom of value area lined up the same. We had this heavier trade down here. Notice how thick this trade is down here. That's a lot more transactions, a lot more buying down here than Friday, where it was much narrower, only 2 periods. Point of controls pretty much about the same. Right now we're at 84s. So above us, 28.90, which kind of right where this short is at, in 88, could see a little bit of resistance because of the 2 pointed controls there. And then to the downside, that's 74. That's where we had stopped overnight, acting as support, so the bottom of the value area range. One thing we were seeing yesterday that is worth noting, we weren't pulling back. We made one pullback into this retracement long, and then that same anchor to new highs pulled back. The third one did not, came close. And when we come close like that, I'll use that anchor point near the 50 to new highs. Notice here, same thing, pulled back, didn't quite make it to the 50, rather than using that same anchor point and just pulling to new highs. Now we're really far away. I'll call that traded and then just take the next swing low to new highs and continue the trend, assuming that, or sort of having the assumption that the market is strong enough where it's not getting that full pullback. So here's sort of another scenario, same thing, where we've come up and traded at the retracement short. We traded at 84.75. By the time you round down here on the 85.13, round down and add a tick, this short traded right at the 50. So we'll call that filled. And then now as we draw the next setup, I'm using this anchor point as opposed to taking this high of the day and moving it down. That's helpful to know where the full trading hours only is. And in this situation, we've got a couple things going on. This is good. We've got a bigger short. We'll call this like a 15-minute and overnight short because it takes the high from yesterday. Short at 28.88s. That just traded at its target. So drawing the next bigger retracement is super valid. But we also have smaller retracements in a series that are trading. Now, this is where things can get a little bit, you get some mixed signals. Because we've got the long now below us. We've come down to where this low to high is now in play. So if you think about it, we were trading in shorts. You know, if I just turned off the x-axis here and we didn't know how much time, you know, were these 5-minute bars, were these hourly bars, daily bars, we can just go through the process of, okay, retracement short there, retracement short there, we're going down a series, retracement short, oh, it failed, and now this is the first long setup after that failure. We broke a tiny swing high, but this is the first break of the 61.8, and now we're pulling back to this 2880 long. So looking to see if there's a reaction, and then coming in here and drawing up the first long setup off of this bigger long, as opposed to just taking a blind limit at 2880s. My stop, 6 ticks, would definitely not be within the 61.8. I mean, that's a huge, big daily setup. So now I want to note, okay, we were coming down in shorts, and again, this is where it can get you can get a lot of mixed signals. We got a short. Okay, so here's the next short. We have the long is now in play. We've traded at the long. I like a long off of lows here, 28, 80, 50, or our quarters, but 50 is a little more aggressive. Notice it's right about the 28.80. The short has not traded yet, so the long is in play first. And that can take us up into the short. We'll see if it goes beyond the short. I love this setup, little double bottom bounce at the long. Whether it fails or holds, that's what's to be determined. But seeing the same setup over and over again in the context of a little double bottom at the bigger support level, whether it's a 50% retracement or some other method, is very helpful to be looking for certain patterns. So the long has traded long at 28.80 50s, and now we're trading at the short. And now we have to see, well, okay, is there going to be a reaction here? Is this short going to overpower the long? And as of right now, no. We've traded at the short, we've traded through the short, and now we're piercing the 61.8. So the short is no longer, the series of shorts down here is failed. Now we need to come and draw all the way halfway back from the day. So that's the opposing here, and see what happens at 28.8375s. When the distance between the 50, I know I'm going fast here, but the webinar is recorded so you can review it afterwards. The distance here between the 50 and the -23, when that is small, like when that's less than 1-to-1, you can put your target out a little bit higher if you need to. So 6 ticks at least. So 28.80 50s being my entry, putting my target at 82s minimum. The idea here is not to get all in at 28.80 50s and then get all out at the -23. So even if you have one contract, I would adjust my target so it's at least 1 point. The idea of this, I even got the wrong low here. There, gives us the same. So yeah, 25s would have been the correct entry, but 50s is fine too. And we traded at 25s, but I just it was a little bit tight down here. I had the wrong low grabbed. So you want to make sure that, I'm using this little setup as a launching point to get into a bigger trade. So taking the long with the expectation that, okay, maybe we go into a series and I can trail my stop and I can ride this long for a while. I don't know. Maybe the trading hour is only short here, holds, and we come down and fail the long. And so I want to make sure that I'm taking some profit at a point that's, close enough to the start of the trade that I can consistently lock in a little bit of profit early on to reduce my risk, so that I'm constantly, on a trade by trade basis, I'm managing my risk very well because not every trade is going to be like yesterday where, you get in the short and then 20 points later you're diving off a cliff. So, but look at how strong, the rally is here off of the long. Very convincing that, okay, this long is being bought. Now we've failed the series of shorts and the trading hours only short, and off we go. So we've got the high of the day, 88.50s. Let me get, we're not even into the half hour mark yet. So in a situation like this, let's say you have two contracts, holding on for 20 points is probably not realistic with like going straight up 20 points. There's going to be some pullbacks. So here's a good time if you want to start trailing swing lows and expect to be taken out up here around. So right now the stop would be an 87 or an 86.75, either or. Expect to be taken out up here, but if you don't want to wait for it to come all the way back, that's how I'd manage the position to get out. And so sometimes, you catch a little bit of a run, and I mean, look at this, 83s to 87s, 4 points, and locking that in, even if it's just a little bit of a dip, is worth it. You can't let 4 points come back for, to either come back to break even or come back and give up 4 points, no matter how many contracts you're trading. You have to be able to tighten your stop, and there's no real swing lows here to do so. If let's say you have 3 contracts, you can still enter at the 50 and then take one off at kind of the adjusted first target. So instead of 81s, you don't want to get in at 28, 80, and 50 cents and then get off at 81s for 2 ticks. So getting out for 6 ticks on the first contract, or even 2 points. I mean, these kind of trades that are very, very small, when the retracement is very small like this, I'm usually taking them at a very big level. And if it's going to work out, it's going to rip pretty quick. And so even just using 2 points for your first target, I'm fine with that. If you have one contract and you want to just have it out there at 3 points and be completely out, that's fine too. But using the first setup on the 512 after the big level identifies that there's been a pause is a super good way to get into a strong momentum change very early on, very, very early on down here. So in 80s, now we're already trading at 88s. I mean, that's 8 points in a matter of 7 minutes. And so with one contract, trying to get 3 to 1 is helpful. I find that it's almost more beneficial to sim trade 2 contracts for a longer period of time than trade 1 contract live. So the progression that I kind of encourage people to go through is to sim trade, work through your strategy, practice some things on your sim account, and then as you're getting more serious and kind of going to make the move to live, let's have you sim trade 2 contracts for 30, 40 trades. That way you can get some, the idea is not to trade 1 contract for your whole life, to get to more contracts. So let's not practice with 1 on sim. Let's practice with 2. So, it's not 10. We're not sort of a little bit unrealistic to go from a sim account to trading 10 contracts, but let's practice with 2 on sim so we can practice some of the trade management with that second lot. And then so you get 30, 40, 50 trades in on sim with 2, go to 1 live, get another 20 to 30 trades where now it's really just about managing your emotions and seeing how you react to the the having real money on the line, and then getting to 2 as fast as you can, based on seeing some progress or consistency with that one contract, because one is definitely the hardest. And so then when you get to 2, you can take 1 off at, say, 2 points on this trade here, this long, and then the second one you can trail. And when you take the first one off at 2 points, even if you left your stop at -6, well, you come away with a small gain. So when you combine taking the first one off for +2 points, and then the stock or the ES here rips, and you put your stop underneath the next swing low, now you've locked in an 82. So you've got 2 points of profit that you already took off, plus your stop is 1.5 points above where you entered. So now you're 3.5 points locked in profit, and you're still in the trade, and you're 6 points above where your stop is. And then we start putting these little swing lows in. You can start trailing these swing lows with the 2 when the market does start to rip like this, starting to moving from kind of switching gears from being conservative, trailing swing lows, to trailing each candle's low is a great switch of gears to be able to stay in the trade, even if it's not the prior candle's low, even if you're just 2 or 3 candles behind, just to kind of make sure if we do drop by a couple of ticks and then keep going higher, that you're still in it. That's fine. Just, I'd rather have you trail. I would rather trail as opposed to get scared and just hit the flatten button. I'd rather have my stop, below a candle's low here at 86s and be trading at 88s and have more upside potential, still have that second contract on, than just say, oh, well, the market moved fast here, I'm just gonna, move my stop and just drag it into making a market order and close out of the position entirely. And so then now as you get into 3 contracts, let's say you do get aggressive with that second one and you get taken out here, you got it right up underneath each candle's low, and you got taken out. Now that third one, you can still be conservative with. You got 2 points locked in, and then another 6 points up here in the second contract, and then now the third contract, you've got a whole bunch of profit locked in, plus profit on the additional position, and then boom, trailing, putting up under the next swing low, and then it's just, you're clear sailing. I mean, you can leave your stop underneath the swing low down here and risk the market coming back that 3 points. And even if it does, even if you give up 3 points on the trade now, it's like, well, 3 points, I've already made 10 points. And so emotionally scaling out does a lot. It did for me when I started to use the same swing trading exit strategies, trailing swing lows, trailing each candle. When I started doing that on intraday trading, it made a whole big difference with my emotional side. I wasn't never super concerned with, I got to pick the exact top and the exact bottom, but to be in a trade, trading with the house's money, so to speak, trading with your profits, that's a very powerful position to be in. All right, so now we're above the first 30-minute range. Notice how, well, I'll get to that in a minute. Maybe we need a little breather here. A lot going on in this one trade, but boy, really, really good. I mean, come on, grab her here. Grab that low. There we go. This scenario where the market opens up, we establish a range for the morning. We start trading in one direction to the downside. Very nice, Daryl. Very nice. We start trading in one direction to the downside, however you want to draw it up, and then we trade at a bigger level, and then we get a little bounce. Notice how this 50, waiting for the long, waiting for this big daily long to set up. By the time I come in here and draw up the next retracement, it lines up right with the daily long. So it's not like we're getting long way up here. It's just waiting for this pattern, waiting for the market to show some sign of pause before it is going to move higher, and then using that as our entry. And now that we're above the first 30-minute range, we may come all the way halfway back, but it may take some time. We could go higher, and then that halfway back might line up with the first 30-minute range, the top of it, something like that. Or we may just go higher in some of these swing lows to highs, something like that. Starting to get a little bit more, and I didn't notice this tick here. Yep, high tick at highs. Wasn't paying attention to that guy there. So there is a high tick at highs here, so a deeper pullback to the next. Not that this is bearish, but if we come back down, the next stopping point might be this 28.8550s. So that's where using these swing lows on the way up, even if they're small, where is the first sign of a trend change? At the break of a swing low. Like, where is the first sign of a long changing direction? Well, it's at the break of the swing low. So whether you use, again, a one candle pullback up here and get really aggressive, not going to fault you for that, to get taken out of this trade up here at 90.50s, and then have it go a couple of points back and then reverse and go higher. I mean, that's almost 10 points of profit. If you are playing it more conservative, and you use the prior swing low, that's fine. Just using the chart is what's important. Even if it's, this is a situation where I wouldn't use the 61.8 of the next, of the big retracement or the next retracement, because it's so far below us. But the idea is to use the chart, use the price action to determine, okay, where would the momentum be shifting? And that's where I would want to get out of the trade. So yeah, 80.50s up to 90.50s, 10 points. I mean, even if it was realistically doing that with one contract is not, that would be very, very difficult to do that on a consistent basis where you catch big runners like that. If you were trailing, if you traded one contract and said, I'm only going to trail my stop, you would have a lot of trades that end up stopping you out or getting, break even before you get to a bigger winner. And it's easier psychologically if you're trading one contract to do all in, all out with a smaller 2 to 3 to 1 reward to risk. So you're consistently taking a little bit more off, on a day-to-day basis. I mean, yeah, yesterday there was a huge short, and then now this morning with another 10-pointer. These are the kind of days where if you can get through this kind of consolidation without getting chopped up. I know I talked to a handful of traders who were saying, I've had a couple of 3-point trades this week, and my biggest trade was only a 4-point winner. But it's like, man, if you can just get through this kind of a market where you have topping tails and bottoming tails, and not the biggest ranges, but a lot of back and forth throughout the day, even if you just didn't trade those weeks, and you're active here on these, and you're in these kind of trades, I mean, that makes all the difference. It really does. You swap 2 losers for 2 home run winners, and you know, that's the game. So let's take a breather here, digest some of that, and see what we can put together next. Ooh, good question, Daryl. So Daryl asks, if you had a 3rd contract or a 4th or 5th contract on, would you leave it all the way down here? I wouldn't. Maybe 1 contract at the least. But so think of it this way. Let's say I had 5 contracts on, and I took 2 off at the first target, and I took 1 off here on this first run up. So I got 2 left, and then I took 1 more off at the swing low. I got stopped out, and now I've got 1 more contract. You know, is it worth it to give up 6, 7 points to see the market come back down here and then reverse and then go back up to make another couple of points? Like, I'd be risking 6 points to maybe make 6 more points. But as the market moved up and I only had 1 contract on, well, that's not going to do much for me P&L wise. So I'd rather close out the entire position on a break of a little bit larger swing low here. And then if we trade at the 50 down here, then just take another long right after that and put on a new position and figure, if I took profit up here, instead of letting it come back 6 points, and then I put a new position on, I've got 6 extra points in the bag already, to where if I got stopped out down here, it kind of ends up being the same. You know, I'm not losing as much because I took off that last contract for more profit up higher. And I know some of that can get a little bit complex, managing positions together, like thinking about how your whole portfolio interacts with each other. But it is a very important thing to develop as you further your trading, especially those that are kind of working towards trading full time or getting away from some other income based job. So rather than letting that last contract or a couple of contracts come, I mean, there's a point where you don't want to give up 5, 6 points. And so taking it off and re-entering lower, putting on new risk, but having an additional 5 or 6 points in the bank, I would rather do that than ride it down and then let that 1, maybe 2 contracts turn around and ride back up to where they were and see if I can keep trailing for another couple of points. You'd end up making more by putting on new risk because you took off some of the profit higher. Yeah, Brad makes a good point here. I commented how I kind of missed the high ticket highs, but that's a great opportunity to both use that high ticket highs as a point to exit the trade. That last contract, you could have easily taken it off there as opposed to having it underneath a swing low. And then look at this little short setup that Brad pointed out. And so exiting a trade and noting that, okay, we've just run up quite a bit, and I mean, this straight up move here, there's probably going to be a deeper pullback at some point. So getting in the short riding that down towards the next bigger full retracement long, that's a great play. You know, you've got all this locked in, profit locked in. Now, high ticket highs, break the swing low, you get out of your long. Well, getting out of a position is usually a sign that the momentum's changing, and that's often a sign that there's a position in the other direction that you can take advantage of. So getting in a short here at 90.50s and riding this down, trailing swing highs. So right now, just, you know, the stop would be, I'm not in this short, but if I were, stop at 89.75s, or if we look at the full retracement and we say, oh, okay, yeah, swing high and the 61.8 are right about the same point. If this can roll over and break lows, then they can tighten my stop. Or on this little sell-off here, you might take and start trailing each candle's high and get stopped out down below a little bit for an extra couple points. So yeah, it's not all about hitting home runs. It's about using the bigger levels to get into trades at low risk entry points, and then just see how long you can hang on. On a short setup like this, I would be a little more aggressive with my stop because the long was so strong and we didn't touch the 50 here, the 88, 28, 85, 50s. We didn't touch that long, but that's usually a sign that we're strong because the market was bought before that level. So the high ticket high remains. We'll see if it's taken out. It's still plenty early. Basically double topped the entry. So another great example. On a trade like this, shorting at 90.50s and then trailing the swing high, and then, whoa, we started falling off pretty quick here, getting aggressive, trailing each candle's high, getting taken out somewhere around in 87s. I'd rather take it off at 87s, and not that I would re-enter on a second test, but you know, that's 4 points where the market came back up here, and this now is the first long setup after the 50, the long 50. It didn't actually touch, but this is the first long after the. So we'll pretend that this traded. It was just a point or so ahead of it, and then the opposing short broke from highs down to lows. That broke. The swing high broke. Now we're sort of on top of the first 30-minute range, low to high, pulled back to the 50, which is also the top of the first 30-minute range. This high ticket high still holds, and so this could be a little dirtier or a little more sideways action here at highs before you know, we break highs, if that's what's going to happen here. High of yesterday is a 94, so that's not too much further above us. So it would make sense that we could move higher here and trade through 94s, and that would be huge. Breaking the high of the low bar on the pullback, I mean, that's a very good sign that we'll make new all-time highs. A pretty good sign that we have the follow through. But first, we have to break the swing high, we have to break highs of the day, and then highs of yesterday. So a couple of steps beyond where we're at. But with the high tick and not quite touching the 50, we're going to have people on both sides here. Some are trying to short, some are trying to go long. So this is going to be a little bit more back and forth. It could take a few minutes here, and it could be a little bit dirty. You could trade in the 61.8 and then push higher and back and forth. Already we've got, a little bit more back and forth at this long. Let's get our market profile going. Getting some momentum. Being focused for a couple hours in the morning is really all you need. I couldn't do that, all day long. To be focused to be as focused as you need to be for 8 hours would be very tough. And I used to trade all day, go to sleep, wake up at the European Open. It got to be a lot. All right, so break of highs, traded at the negative 23. Next long, 91s. On our way to breaking 94s. It's a new high again, not quite at 94s yet. few ticks away from yesterday's high. Trading at it. 94s they trade. Notice how the setups are getting a little smaller up here, but good series. This is what I was expecting to see closer to the Fed meeting at the end of September. Took a little longer than usually does to get back to what we usually see. So we traded at 94s. That's yesterday's high. The swing low is the 91.50s if we were gonna get some selling here, and then the next bigger retracement would be down here, 90s. See if we can go higher first. There we go. Higher it is. So even sometimes if these retracements are a little dirty, 6 ticks still gets the job done. Now we really should be off to the races. This 95s is kind of the target from the trading hours only long from down here. So sometimes that leads to a little bit deeper pullback. high ticket highs. Now on a trending day, we tend to get a high ticket highs and then break it very quickly thereafter. It's a good sign that the trending day is forming. The next stopping point, it would be, well, 2900 is kind of that bigger round number, but 2906 is where the short is at above us. So see, we had that high tick at highs, lasted a minute or two, barely, and then broke. So 2906 is what I would target from here. The big retracement, yesterday's low to yesterday's high, pull back where we got in down at lows today. That target is 2900, so there may be some more, a little bit more resistance there. I would be surprised if we make a full trading hours only pullback at that point. You know, it's okay to take, when you have a big winner, to kind of hit the pause button. You don't have to jump back in another trade right away, or, you know, especially on Fridays or Mondays. Sometimes if I just have one decent winner, especially on a Friday, I may just stop altogether to go into the weekend on a high note. And so, you know, nothing worse than taking a big winner and then jumping in another trade right away and, you know, being a little bit flustered or, you know, take a quick loser right after that and not really be able to soak up and enjoy the winner. You know, catching the meat of the move is what we're trying to do. So it's all right if you aren't in every single trade, or if you take a big winner and then take a step back. as we keep drawing the longs up here, just keep taking the swing lows to new highs. Another high ticket highs up here. Which is also right at just about at the target. So this could be start us in a deeper pullback, either from the 86 low to high, something like that. Again, I don't see us making a full retracement on the day, although it now does keep us above the first 30-minute range. Yet to break this swing low back here. This has more weight to me than this swing low on the move down, because this swing low happened on the move up. So yeah, this break of a swing low that occurred on the move up is important. Sometimes you get these legs down, but the swing low is occurring on the move down. But again, 2,900, I expect there to be some resistance there just because it is a bigger round number. Another break of highs by a tick, but see how we formed that high ticket highs, pull back a little bit, broke highs. So now we don't have a high ticket highs, but this double top could, if we break the swing low now, maybe a short that takes us down a little bit further as we get into the later part of the morning. Could be the case. But all things are looking pretty decent for longer term move higher here. So 2,900's 50, 2,900 and a quarter is the retracement target. So drawing the next setup then lines up with the top of the first 30-minute bar. At some point there will be a bigger pullback that usually comes a couple hours into the day. kind of in a range up here now, 96s to 90 to 900s. Seeing a lot of these stocks break the high of the low bar and the pullback. Microsoft I like for the long, but when you get into some of these other ones like Google, notice not is it not only breaking the high of the low bar in this pullback, but it's in a series of lower lows and lower highs. Not as exciting as a nice upward trend of Microsoft. Higher highs, higher lows, pullback, held the major swing low back here, broke the high of the low bar in the pullback. Home Depot's chart's a little bit messier now than it was. Now breaking this low down here. So I've got the next retracement drawn. Same kind of thing as we saw on the downside this morning, where we had bigger short and then smaller shorts on the way down. Here we have, yes, we have the full retracement, but we also have these two longs on the way up. So we'll see if there's anything at 28.93s, and same thing, I would wait to let it trade, and then if there is a bounce, maybe take a long off of that level. With the way we've seen the 30-minute chart here go short, 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 and then break the short, trade in the first long, then it would make sense to trade in the next long, like the next full retracement, which would be a little bit deeper. Looks something like that. 89.50. So again, you don't have to pick which one you're going to take. You just let it trade, and then once it does, if there is a reaction, then you can come in and take a setup off of that level. You don't have to just do a blind limit. So here are the 50 trades of the first pullback. A little bit bigger one is still down below us. So we'll see what we get, and don't need to be overly aggressive with blind limit orders here. Just letting it trade, letting it break a little swing high, and then looking for another long, and then always drawing the opposing short and seeing what the reaction is like there. Interesting that the breadth is only 1-to-1 here. I guess we are flat on the day, but So letting that trade and break the swing high is super important. Looks like we're going to get that 89.50s. So that's the top of the 30 range. Right down here. And same thing, letting it trade, letting it bounce, and taking the long off of that if that's what we get. So I think we'll leave it at there today. Leave it at that. Pretty good little morning again. So far, Monday, Tuesday this week, off to a great start. If you have questions, feel free to shoot me an email. I know I'll be chatting with some of you later today. And yeah, as always, feel free. tim@eminimind.com is my email. Happy to chat more. Always fun. So thanks for tuning in, everyone. Thanks, Patrick, Daryl, Stan. Good questions today. Appreciate it. So have a great day, Mike. Thanks, everyone. And we'll talk to you soon.